all signs are pointing to turmoil in the used RV market. And when I'm talking about used RVs, just to clarify, I'm not just talking about motorhomes. I'm talking about motorized RVs and towable RVs like travel trailers, toy haulers, fifth wheels, etc. And you can lump in truck campers with that as well. Now, when I'm talking about turmoil, I'm not talking about some clickbait stuff about buying stuff 10 cents on the dollar. I'm not referring to that. I know a lot of you wish that. I know a lot of you are predicting that, but that's not going to happen. The turmoil I'm talking about is very different. Welcome to HBRV Lifestyle, and today is your November 2025 RV industry update. Now, before I get to the used RV turmoil, the first thing that we really need to cover is interest rates. It is the number one question I am getting in emails, direct messages, just communication in general. A lot of folks are wondering, when are RV rates going to crash? When are we actually going to get rates that are below 8%, below 7.74, 7.5? When are those rates going to come down a lot? And the answer to that is probably in 10 years, if I were to make a prediction. Now, I made a prediction in 2022 that they'd probably start going down in 2027. But the reality is what I'm talking about is slowly going down. So the Fed rate that went down during their last meeting does not really generate a lower RV interest rate. RV interest rates and mortgages, that's a more complicated subject of how that's determined. But we're going to say, for argument's sake, just to simplify things, that recreational vehicles are one of the highest interest rate loans, and it's been that way for decades. Hasn't changed. It's also a higher risk loan for the lender, whether it's your own personal credit union, whether it's a 401k loan, whether it's a traditional RV loan, whether you take a second out on your mortgage. In the eyes of a lender, if they're going to basically finance a toy, how do I put this? They know there's risks involved that you're going to lie to them and live in it. You're not going to pay, or you're going to turn it back in. And we've seen that a lot right now. If you actually look at the voluntary repossession rate, it's actually gone up significantly over the last 7 months. Now, they also lump power sports and boats and marine into that number. So it's not just travel trailers, toy haulers, motorhomes, etc. It's also big boats, side-by-sides, dirt bikes, motorcycles. Those kind of get lumped in under that category. But to see that level of voluntary repossession is kind of scary for lenders. So if you've noticed, or a lot of people haven't noticed, that the lenders have actually tightened up. And I did a video and a live stream about how they're tightening up when it comes to inventory loans. So when we carry a piece of inventory on our lot, it's through a program called Floor Plan. And the program Floor Plan is basically an inventory loan. And there's a lot of big banks that are getting out of that. They're getting out of it on the car business. They're getting out of it in the boat industry. They're getting out of it in everything. They're like, baby, no way. The money's just not worth it because dealers are going out of business. Amazon's laying people off. AI is taking over a lot of white collar jobs. We're starting to see the economy shrink because of AI. But yet we're going to have and sell more RVs. There are going to be more new RVs sold here in 2025 than there was in 2024 and 2023. I'm not talking about shipments because the manufacturer goes off shipments. I'm talking about actual retail sold new units has actually gone up in 2025. And I predict that it's going to continue to go up in 2026. And I'm going to get into that in another video. But talking about the lenders, that's a great segue into the last thing I'm going to talk about, which is what I originally started the video with, which was the used RV market turmoil. The turmoil is actually going to be with the lenders. Okay. Now, a lot of people go for used because they don't have the down payment or the monthly payment budget or the cash budget to buy a brand new one. Hey, I bought a used one. I've got a 2006 Weekend Warrior. Okay. So it's nothing to be ashamed of. You don't have the cash or you can't afford the payment on a new one. There's nothing to be ashamed of. That's perfect. But a lot of the credit unions that I have been speaking with over the last 3 months have started to warn me and finally has started to come into fruition that those 10 and 11 and 12-year terms on used RVs are going to start shrinking to 5 to 7 years, especially if the unit starts getting over 5 years old. Now, I'm going to repeat that again for a lot of you guys that, like to misquote me. Okay. Credit unions generally, if let's say a unit is 7, 8, 9 years old, will still do like a 9 to 12-year loan on a travel trailer, a toy hauler, a motorhome. So it makes it very attractive to get a good quality travel trailer like an Arctic Fox, a Flagstaff, a Rockwood, a Cougar, an older Grand Design Solitude travel trailer. I'm not talking about the fifth wheel. Okay. And, they're like, hey, look, I could pick one up instead of picking one up for 45 grand and a $400 payment. I can get a used one that's 8 years old for like 18, 19 grand or 20 grand. And my payment's 250. Okay. Well, now what you're going to start seeing is a lot of those used RVs that were like $200, $220, $250 a month are now going to be as much of a payment as a new one because the terms are going to shrink with the credit unions. Now, for a lot of you, you guys don't mind. A lot of you are like, hey, you know what? I'd rather pay $400 a month on a 5-year loan than $400 a month on a 10 or 15-year loan. Totally get it. And, I understand that. In most cases, just to let all you know, I have met very few people in my career, in my over 15 years of being in this business, that actually took the full term of the loan on an RV. Okay, when somebody takes a 12 or 15-year term on a travel trailer, toy or motorhome, I very rarely see them actually make every single payment for 15 years. Generally, they sell it, they trade it, or they pay it off soon. So it's a rarity. But at the same time, okay, for those of you that are shopping cheaper because you want a cheaper payment, you better do something now, because once right around the end of January into March, April, into the dog days where everything's going bonkers next year, you're going to start seeing these terms shrink on these older units. And those $200, $250 payments on good quality used RVs like a Nash or, a Jayco Eagle, something of that nature, something that's fiberglass, nice, that you guys have been looking at private party, or maybe you've been looking at a dealership. Those 10-year terms on those older units are going to start becoming 5 to 6 to 7-year terms. So just want to kind of give you that. Now, how that affects sellers and buyers is this. Even private party, okay, if you're selling your unit private party, 8 out of 10 people you're going to meet are seeking some sort of a loan to purchase your unit. It's not cash. It's very, very rare that it's actual cash. Okay, very rare. And for those of you, well, if you can't afford it in cash, you shouldn't buy it at all. Well, you know what? That's because you don't want everybody being able to enjoy the lifestyle. You'd rather have less people so that way you can enjoy more campgrounds freely. Get it? 100%. But that's not the way our economy, our world works. It all works off of debt. In fact, everybody's dollar is debt. Now, if you want some more information about RV financing, how to get RV loans, etc., click on that link right there, and it'll take you to the playlist that I have that covers almost everything about RV loans. Some of the videos are old and very bad quality, but I think you'll enjoy them. Till next time, remember that RV always stands for toolkit and sense of humor.